Well, good morning, everybody, and Happy New Year. It's 2025. And to inaugurate this new year, where I'm going to show my tax services, see the pinned comment below, I'm a CPA, we're going to react to a famous YouTuber called Whiteboard Finance. This guy has like 1 million subscribers, and apparently he's giving great financial advice. So I'm going to react to his portfolio, and I'm going to tell you what I think about the quality of his strategy and his investment acumen. And as a hint, it's garbage. So let's go ahead and react to Marco Whiteboard Finance's How I'm Investing for 2025. And keep in mind, guys, keep in mind, if you see Bitcoin and investing in a video, should be a red flag. Let's make sure we're sharing. Okay, let's go ahead and react. Here's Marco right here.
Welcome back to Whiteboard Finance. In today's video, I want to show you how I'll be investing for 2025. So I'm going to give you a big breakdown here. I usually don't have stuff on this side of the whiteboard, but it's going to be there the whole video, and I'll give you more information on this side as we go. But basically, it's the end of the year, holidays are starting, so I want to give you guys a perspective of how I'm looking at things and how I'll be investing my money in 2025 and moving forward. Stay tuned. Okay, so let me start this video by breaking down the things that I'll be investing in by asset class, and then we'll break down.
I like how he just cuts. Like, why not just like go on and start talking about the your portfolio? Well, I gotta edit myself so I can just bounce like 2 inches to the right.
Down each asset class as we go. So if this is a pie, I've given this analogy 8 million times throughout the 7-8 years that I've been on YouTube. Basically, you want your pie to be representative of your net worth. Think of it like a pizza. Think of it like an actual pie. Each slice is an asset class, and
is it a pizza or a pie, Marco?
Each asset class, you give a percentage or a weight in your portfolio. So say for easy numbers, your net worth is $100,000. You want a certain percentage allocated to each asset. That way, you know if you're overweight or underweight, and you can rebalance much easier that way. So with this, let's start with stocks. So I want stocks to be basically 1/3 of my net worth. So we're shooting for 33%. And again, I'll break that down as we go throughout the video. Next is real estate, another third, 33%. It's been a great inflation hedge over basically the last 100 years or so. And then we have Bitcoin at 15%, cash at 15%, and then we have precious metals and collectibles at 4%.
You know, I don't really like the concept of, keeping something at a fixed percentage, especially when it comes to stocks. Because looking at this portfolio, I can tell you what's probably going to have the highest returns over the long run, by far, unless he's in some mega city and real estate just vertical lines every year, is going to be his stock portfolio. Okay? And if you're selling your stock every time it goes to 35% to drop it down to 33, you're just reducing your portfolio for no reason. You're not letting the stocks grow as they should far into the future. You're taking money from something that has long-term appreciation potential. You're cutting it out while it's growing, and you're putting it into other things that aren't going to build your net worth. So sometimes like your portfolio is not going to stay a fixed allocation. It's like in an index. Okay, some stocks are going to go way high in the index, and other stocks are going to plummet in the index over time. And you don't want to sell the stocks that are going up to buy the stocks that are going down, because a lot of the time stocks go up for a reason and stocks go down for a reason. So instead, you should just let it grow naturally instead of keeping it at this fixed percentage. The only exception is if you're retired and you want bonds and stock, because the bonds are there to kind of give you, liquidity for short-term needs. But with the exception of that, you should not keep your portfolio at a fixed percentage like this, because the stocks are going to grow faster than the real estate. What's he going to have to do? Buy another real estate property to keep up with the stock growth? Just saying.
So now that you understand the big bird's eye view of how I'm investing by asset class, let's break these down. Okay, so let's break down the stocks portion of my investment plan for 2025. So if you guys know me, first and foremost, I'm typically a dollar cost average investor. So if you don't know what dollar cost averaging is, it's basically just investing a certain amount of money at a certain interval for an extended period of time. So as we both know, the market goes up and down, and you want to end up somewhere in the middle if you dollar cost average, hoping that the chart goes up and to the right as it has done in the past.
I mean, I agree with that state, not the rest of what he's going to say, but I agree with that statement. Dollar cost averaging, you basically shouldn't even be looking at your portfolio. You should set up your automatic contributions into your 401k and your IRA, whatever, and just let it go. Make sure you're reinvesting the dividends in a tax advantage account, and you could literally just go do whatever you want to do, and you'd be shocked. The problem is if you keep watching your portfolio, tinkering with it, that's what's going to lead to, long-term issues that could negatively affect your performance. Just my opinion. But let's see what amazing investments, because I can already see that he's a little special when it comes to investing.
So what I'm doing right now is to break down my biggest position. I'm not going to share every single thing that I invest in, but just so you know, VTI, which is Vanguard's total stock market fund, is basically 53% of every single one of my portfolios. Okay, so out of everything that I hold, VTI makes up more than half of it. The thing that I do want to highlight though is small cap and mid cap, but specifically small cap value. So I've been buying AVUV for a number of years now, and it's done very well for me.
Okay, first of all, VTI is the total U.S. market. It is the second best ETF known to man. It is a great ETF. I got nothing against VTI. If you want exposure to just the United States, it is the only ETF you need. VTI has everything in the U.S. market. Okay? That includes small caps. So why are you buying a small cap ETF when VTI already has small caps? I'm confused here, Marco. He's got 1 million subs. Oh, what do I freaking know? Okay, let's continue.
So the reason for that is because if you look at this chart right here, you can see that small cap has actually outperformed mid cap and also the S&P 500. You can take a look.
Wait a minute. That's a 4-month chart. 4 months? Wow. You should put Bitcoin on there and Palantir and SoFi, bro. Oh my God. You should buy those. 4 month. This guy's pulling up 4-month charts. And at the bottom, it says in bold, past performance is no guarantee of future results, except for large cap tech.
Look at that, because for nearly 2 years, market leadership has typically been dominated by the Magnificent Seven. If you look at any fund like a VTI or the S&P 500 or any of these big funds that buy mega cap companies, they're all dominated by the biggest market cap because they are weighted towards market cap. So market cap is simply just the stock price times the shares outstanding, and that gives you the market cap or the entire value of the company.
Have you ever considered why the market cap is different for different companies? Maybe it's because of future profit expectations. Maybe it's a certain market cap for a reason. I don't know.
So if you look at any of these funds like VTI, for example, they're just loaded by the Magnificent Seven. These are your Googles, Metas, Teslas, things like that. NVIDIA, for example. So what I want to do is I want to load up a little bit more on small cap and small cap value, just because they simply have much more upside to run, in my humble opinion. And then
okay, buying small caps is the most degenerate thing you can do. Well, not the most degenerate, obviously, but you're massively overweighting companies that the market has assigned very small market capitalizations for various reasons. You're massively overweighting. You're saying the market is insanely, not just wrong, but insanely wrong about small caps and their future profit expectations. Okay? And maybe the market is wrong. I don't know. But over time, the market figures everything out. But you shouldn't massively overweight small caps. That doesn't make sense to me at all. Okay? Market cap weighting is the sauce. It is the creme de la creme. Market cap weighting. Things are where they are for a reason. Okay? Let's keep watching.
And also, what I'm doing is, and if you guys don't know my investment philosophy, it's typically more like a barbell philosophy. So on one end of the barbell, you have super conservative investments. That's why we have cash right here. And then if you guys don't know my investment philosophy, it's typically more like a barbell philosophy.
Okay, let's see Nassim Taleb's barbell strategy. So my options are, what is this? Gold, shiny rock, cash, treasuries, and okay, so that's one option. And then so I buy those, and then I buy options, startups, and cryptocurrencies. And most people can't invest in startups. Okay, you have to be an accredited investor. No, barely anybody on YouTube is an accredited investor. You got to have like what, $1 million in net worth outside of your home and make a lot of money at your job. No, okay. If your options are gold, cash, T-bills, options, startups, and cryptocurrency, you're a clown. And he's not even following this strategy because he has VTI. This is not your strategy, clown. Nothing. You just start either startups or cash. That's it, bro. This is for like an ultra wealthy person that has money to blow.
Philosophy. So on one end of the barbell, you have super conservative investments. That's why we have cash right here. And then really nothing in the middle, and then super risky stuff on the other side, which is why we have Bitcoin, and then the next thing I'm going to talk about right now. So I actually bought a couple weeks ago a MicroStrategy December 19th, 2025 call option. I paid $19,100 for that one contract. If you don't know what options contracts are, they allow you to control 100 shares of the underlying asset. So my strike price is 400 and my break even is 591 a share. And we have about 365 days to get there. Okay.
$591 a share. What is MicroStrategy's stock price? Okay, if you don't know what MicroStrategy is, it's a company run by a fraud named Michael Saylor who borrows money to buy Bitcoin. So it's a levered Bitcoin ETF, I guess you could call it. Okay, so MicroStrategy's stock price is 289. His break even was what, 5 something? This thing is probably going to collapse 90 to 100%. This company will probably go bankrupt in the long run because they're taking out debt to buy a fundamentally worthless asset. Bankruptcy will happen. It's going to happen, boys. Okay? And this mother effer bought a call option that if you never get above the break-even point and you don't exercise it, it expires worthless. So he just threw 11,000 or whatever in the trash. Oh my God, this is not good, people. This is not good. Not good at all.
So that's kind of my more risky equity position. And then I still have your usual suspects. I still hold a bunch of SCHD. It's one of the biggest holdings in my portfolio. I have a little bit of SPY in my Roth and things like that. So,
okay, so all the stocks in the Shida are in VTI. The SPY is the S&P 500, and the VTI and the SPY have like 80% overlap. This is just another clown portfolio. You keep thinking VT's dumb. No, you're dumb. Okay? It's all a random mishmash of garbage and overlap. That's all you're doing. Think about it. Why are we overlapping and creating complexity? Because, I've got to have a lot of ETFs for diversification, bro. I'm gonna have SPY and VOO for diversification, bro. That's 2 ETFs, not 1.
So with all that being said, that's pretty much how I'm going to continue investing into 2025. It's going to be dollar cost averaging into my core holdings, such as VTI, AVUV, SCHD, with a little bit more spiciness on the craps table of MicroStrategy. So that's either going to age like a fine Montenegrin wine, or it's going to age like milk. And you guys know me, I've always been transparent with you, so I'll let you know. Okay, so number 2 is real estate. So this is supposed to be 33% of my pie. If you can see right here, 33%. Realistically, it's about 31% at the time of this recording. So I'm basically right on track. That's the beauty of weighing your asset classes. You know exactly where you stand and you can rebalance at any time. With real estate, it's a little bit harder because my house is paid off. So I do have a lot of equity in my home, other than property taxes and bills and maintenance, which never go away. Don't you just love home ownership? So even with the paid off house, you're just renting from your municipality in the form of property tax.
Okay, you have to pay taxes. That's still better if you have a paid off. I mean, I'm not paying off my home fast because my rate's so low. I'd rather buy every stock in the world, but maybe I'm an idiot. But when you pay off your home, which is a good thing in the long run, you should. Your payment, if I paid off my home, I'd be paying $350 a month for taxes and insurance. I pay like $1,400 now for the mortgage, taxes, and insurance. My taxes just went up a little bit. Okay, I'd rather pay $350 plus whatever it's going to cost in the future for inflation, as opposed to $2,000 a month for rent, which is probably what I could rent this for. Okay, you're not renting from your municipality. It's always a better deal to have a paid off home than to freaking rent perpetually. But you know what? Million subscribers.
That will never go away. Stop paying your property taxes and see who really owns your house. But on a side note, my house is paid off. The reason I did that is because I went into psycho dad mode. I have 2 kids. I don't want any debt. Mathematically, it was dumb. Financially and peace of mind, it's fine because it allows me to be more risky.
I have 2 kids. Okay, I don't understand like psycho dad mode. You got to pay off all your debt? Why? Pay off home or buy every stock in the world in a tax advantage account.
In these other areas of my pie, right? When you're taking out a mortgage or low fixed rate debt, you are effectively making a hedge against the US dollar. Okay. You're saying, hey, I'm going to borrow as much money on year zero as possible and pay it off over time when inflation is paying off my debt for me, right? So you can do the calculator.
Good point there, buddy. My interest rate is lower than inflation.
I have a home affordability spreadsheet. If you're interested, you'll see how much you can pay in interest over the lifetime of the loan. But if you're keeping up with inflation, which real estate has historically done, you should be good. That's the reason why I paid off my house. For me, it's just a glorified savings account, and it's a place that I live and raise a family. It's not an investment.
Okay, you just said why it's not smart to pay off a home, which I agree. I mean, you should pay it off over time. Oh, you have to. But, he gave all the reasons to not pay it off, and then he said he paid it off. Okay? And it's not a glorified savings account. You in a savings account, I can pull money out of my savings account. Right now, I can transfer money into my checking account. How do you get money out of a house? You got to sell it, which means you have to buy a new house or rent, or you have to borrow against your own home. It's not a glorified savings account. It's fake clown net worth.
Investment. So if you want to do investments, you have REITs and you have rentals, right? So I still buy VNQ. I dollar cost average into it. It's done very poorly just because the interest rate environment that we're in has been absolutely insane. It's super high. So when rates are high, it's typically not good for real estate developers or commercial real estate in general.
VNQ is stock and REITs. REIT stocks. Oh, by the way, all those stocks are in VTI. I wouldn't put that under real estate. I'd put that under the stock portion.
So keep that in mind. That's an option if you want to track an ETF of REITs, okay? Rentals. So I don't see myself buying a rental in 2025. I already went down that rabbit hole many years ago. We bought a defunct development back from PNC for just over $1 million when I worked in commercial real estate. The builder basically went belly up in 07, 08, had hundreds of unfinished lots. And we basically started building spec homes. We were selling single family homes. We were building duplexes to rent out. We did all that stuff. Okay. We got rid of all those in about 2016, 2017. Obviously too early, but still made money. It is what it is. So for me personally, I don't see a rental property being on the cards. So I'm not going to be doing that for 2025. But again, my net worth between my home equity and all the other real estate proxies that I own, I'm pretty much happy with where I sit at 31% of my net worth. Okay, so moving on to number 3, cash. Cash is 15% of my net worth. At the time of this recording, it's about 13%. So right on track there as well. So where's my cash going right now? So in Robinhood Gold, I'm earning 4.25%. I have some in M1 Finance earning 4%. And then also Capital One, who I've been with for years, 3.8%. Obviously, the rate cuts have affected that. This used to be at like 5. This was 5. And this was like 4.5.
Okay, cash at 15% of your portfolio, at least at his age, is kind of high. I mean, it really depends on what you're doing. Like if you're early retired, that makes sense to me. But for a young guy, he's probably in his 30s, that's a lot of cash. So he's talking about inflation and this and that. And then he's got 15% of his portfolio in cash. And then he's got a huge chunk in a house, which basically over time, real estate kind of keeps up with inflation. It doesn't necessarily beat inflation unless you're like in specific areas. And in the long run, I don't know what's going to happen with real estate. We might have real estate price declines. We have freaking super high interest rates. And homes have so far kept their value. But if this persists, it's possible that we may have price declines, especially as boomers die off and their homes get liquidated. I don't know, okay? His portfolio is not that good to keep up with inflation. I'm just going to say that.
For foreign some change. So T-bills right now are currently yielding 4.3%. I don't see myself buying T-bills. The reason for that is because you're locking your money up for a period of time. Yes, you can trade T-bills, but that kind of defeats the purpose of them. So
what are you talking about? You could buy SGov. It's an ETF. And then Vanguard's coming out with an even cheaper one that has like a 0.07% expense ratio. It's a perfect way to put your cash. And it's not subject to state tax. It's actually more tax efficient than other accounts. Look at the other interest rates. Okay. He's getting lower rates on his checking accounts, and he's paying federal and state tax. For T-bills, you only pay federal tax. So it's actually way more tax efficient. Personally, just my personal opinion. But whatever. Yeah, you can. Yeah. What's the point of trading T-bills? You can buy SGov. You get monthly distributions, tax efficient, and you can sell it whenever. My portfolio, when I retire, is going to be like the Vanguard short-term Treasury ETF whenever that comes out, and VT. And I can sell the Treasury ETF whenever I want. There's no volatility in that thing if it's short-term. Whatever, Marco.
So even after tax and stuff like that, you're not really earning 4.3%. After tax on these, you're not really earning these rates either. That's why I wanted to talk about municipal bonds. So if you're in the highest tax bracket, municipal bonds are similar. They have similar rates as T-bills and some of the other solutions out there like CDs and bonds and things like that. But they typically pay interest income that is exempt from federal taxes. So they may also be exempt from like state income taxes if purchased from the home state. So if you're in a high tax bracket, just the tax savings alone is going to juice these municipal bond rates up to like 6 or 7% at the time of this recording. You have to realize you're paying taxes, you're paying 1099 interest on all these right here.
I mean, you always have to compare after-tax yield. And, it is true. Like if I bought Virginia munis, which I don't, then I wouldn't pay federal tax. I wouldn't pay state tax. But the yields, I think, are lower, number one. And then number two, when you invest in a muni ETF, they usually have super high expense ratios. Like, go find a Virginia muni ETF. I think the last time I looked, it was like a 0.5% expense ratio. Like, that's going to destroy any savings that you get from taxes, in my opinion. So lower yields and high expense ratios for muni bonds. I mean, if you're like very wealthy, okay, maybe. But I would hazard a guess that most people are not in the tax bracket where muni bonds would actually make sense. I'm just saying.
So you're not really yielding that rate. So when you look at inflation and you look at municipal bonds, for the people that are in the higher tax bracket watching this video, that could be an option for you. I was at the barbershop the other day, sitting next to an old commercial real estate investor that I know. He's just casually pulling up his Fidelity account, and it had a couple commas in there. Okay, and there's some numbers before the first comma, right, indicating, deca millionaire. So we got to talking, and he said, most of my stuff is just in real estate and municipal bonds. So that's something you may want to look into if you're in a higher tax bracket. Okay, so number 4 is everybody's favorite, Bitcoin. So Bitcoin right now, the target has always been 15% of my net worth for years. But right now I'm actually overweight at 22% of my net worth.
22% of his net worth is in Bitcoin. And that doesn't even include the call option, which I guarantee you will expire worthless. This guy is out of control, man. This guy is not a good investor. I'm just going to be honest. He's not a good investor. Y'all think you're good investors. You're not. Most of what you do doesn't make sense. What makes the most sense is a globally diversified market cap weighted portfolio that you don't freaking overlap and you avoid hype garbage that doesn't produce anything. In the long run, you will find success with a globally diversified market cap weighted portfolio that you buy in a tax advantage account consistently over your working life instead of this hot random percentage trash that he's doing and then buying Bitcoin. Like, it's unbelievable. A level of clown market that we're in right now. But it went up, bro.
You count the MicroStrategy that I hold and some other Bitcoin proxies or Bitcoin related equities, it's actually higher than 22%. So I'm just dollar cost averaging. I'm never selling. Okay. The reason I'm never selling, because to me, this is something that is, how do I explain this? It's either generational wealth or significantly less than what I own it for, right? There's no in between. It's just a huge asymmetric bet. And I don't need the fiat right now. I don't need the fiat US dollars at this point. So I'm just holding on to it.
You have cash. You have cash. What is cash? I don't need fiat, but I have cash. This guy has 1 million subscribers. Oh my God. Guys, I'm the dumb one, though. Remember, I am the moron here. Okay, not this guy. Not Mr. Marco here. I'm the dumb one. I don't need fiat. I'm going to buy a CD.
It's up about 125% year to date if you've been paying attention. If you haven't watched my many YouTube videos, you may want to check out the last one I did in my $100,000 Bitcoin journey. Those have all the books you need to know to read about Bitcoin if you still don't understand it yet. So the reason why I'm not selling is basically because there's too many positive catalysts right now when it comes to government and things like that. So essentially, in a nutshell, for the sake of this video, all the headwinds have become tailwinds, in my opinion. So I personally use River. This is not a sponsored video. If you want to get some Bitcoin from River, check out the link below. I dollar cost average literally every day. I buy Bitcoin literally every
Does he have... Okay, well, number one, this is a sponsored video, which, I mean, my videos are sponsored by me. Check out my tax services. But he's got precious metals link here. And then he says, get $5 of free Bitcoin from River. You don't think he's getting some kind of referral commission for that? I would say that this is a sponsored video. He's probably, I can't prove it, he's probably getting compensated every time you put your money into River. It's not a sponsored video, bro. Oh, check out my gold, bro.
Every day, and I smash buy it on the dips. I had limit orders down to $10,000 when Bitcoin was trading at 16K. Okay, it's close to $100,000 right now. So it's just one of those things that you have to study. If you don't get it, you think I'm an idiot. If you get it, it's the smartest thing on this list. Okay, so number.
If you don't get it, you're an idiot. Oh no, I get it. You're buying something because you pulled up the past performance, you looked at the gains, and you said, that's a good investment because it went up a lot. That's YouTube finance, ladies and gentlemen. That is most investors. That's how they think. That's how it works. I've proven this 1,000 times. You pull up the 10-year chart and you buy what went up the most. Doesn't matter if it's fundamentally worthless garbage. It went up.
Number 5 is precious metals and collectibles. So precious metals and collectibles, I shoot for about 4% of my net worth. Right now, if I had to guess, it's probably somewhere around maybe 1.5% to 2%. I would like to start increasing my gold stack. So this is not all of my gold, just because I don't want to bring it down here. But these are gold ounces, gold ounce coins that I bought from JM Bullion. If you guys are looking for a place to buy precious metals, which I'm going to talk about more here, check out JM Bullion. I've been buying from them for years. You can see all these receipts. I've been buying from them for 8, 9, 10 years.
We believe you, okay? We know you bought from JM Bullion. I kind of want a gold coin myself, but the only reason I want a gold coin is because it's shiny and pretty. But when you buy from a dealer, like, you're paying spreads, you're paying, like, they're making a profit. If you wanted gold exposure, like, to the price fluctuations, I would just look at an ETF. I'm not saying do that. I'm not investing in gold. But buying like a coin is like the worst way I think you can get exposure to the price of gold, in my humble opinion. But I do want a gold coin because it's very shiny. I actually want a gold bar, but that would cost like $80-something thousand. And it probably gets stolen.
Now at least. So basically, when you look at precious metals, it's a good hedge against inflation. Gold is actually trading at all-time highs right now as we speak. And the reason for that is because of monetary debasement. The governments are printing fiat currency like crazy. Why do you think Bitcoin's exploding? Why do you think precious metals are exploding?
That's why I'm using 15% cash, right? Yeah, makes sense.
Why do you think I even have this as part of my net worth? So check out JM Bullion if you haven't. They're beautiful, and you can pass them down to your kids or grandkids one day. Also, if you check out other types of collectibles, you have trading cards, right? You got LeBron James rookie, Kobe Bryant rookie, Giannis Antetokounmpo rookie, Luka Doncic rookie. Should have bought a Nikola Jokic rookie, but that's a conversation for a different video. Best center of all time. A lot of people.
Sports ball!
We're not going to like that, but it is what it is. So some people buy trading cards. Some people buy Pokemon cards. Some people buy precious metals, cars, watches. Some watches increase in value over time. Cars do increase in value over time. I know a lot of listeners probably don't want to hear that, but it's not your daily driver, and it's an internal combustion engine 911.
Just buy a used Ferrari, bro.
11 stick shift Porsche, it's going to go up in value. Trust me, especially with self-driving, electrical vehicles, government mandates. People are going to pay out the nose 20, 30, 40 years from now for a stick shift internal combustion engine sports car. Trust me. Sold all my silver. Here's a tweet from 2020 saying me ready to unload my physical silver, July of 2020. And here's July of 2024, selling 100 ounces of silver at $31 an ounce, put it straight back into
Bitcoin went up a lot. Silver did not go up a lot. That was his logic.
Bitcoin, silver stagnating, Bitcoin went through the moon, right? Great trade. So with all this being said, I appreciate you guys watching. I want to give you my thoughts. Stay tuned right now. Okay, so let's get into my thoughts. So some people say diversification is diversification. Some people are saying, why wouldn't I just keep investing in XYZ that has done very well for me over the years? And I actually agree to that to an extent. So if you're a business owner, or if you're someone who runs a specialty, say you're the world's best woodworker, the world's best metal worker, the world's best auto mechanic, the world's best restaurateur, right? Or commercial real estate investor, doesn't matter. Yes, you probably should have all your eggs in one basket. Okay, I'll be honest there, because the ROI that you're going to get from running a profitable business is probably going to beat any of this right here.
Well, you could have a profitable business and then you can invest the difference in other assets. You don't need to like just constantly reinvest into your business, especially if you're a smaller business. What am I going to reinvest? The profit I make from YouTube, what am I going to reinvest in? I'm just going to buy like 5 cameras, 20 mics. Well, if I make profit and I don't need anything, I don't have any expenses, I'm not just going to reinvest into the business. I'm going to invest it. That's what I do. I make extra money from YouTube and then I invest it in DT, which is diverse. Oh, trust me, that's diversified, okay? It's probably more diversified than this clown portfolio.
What I'm trying to help you do is if you are someone who's just, earning US dollars in a job or earning a wage or a salary worker, someone who just wants to invest soundly and not have to worry about side hustles, driving for Uber, doing all these million things that you don't want to do, this is probably a good way to go, right? So for me, diversification actually leads to this, sleep well at night. So Swan, I sleep well at night knowing that if any of these assets went to zero, I'm not going to go jump off a building, right?
Okay, stocks aren't going to zero. Like the global market is not going to zero unless the world ended. I sleep soundly at night knowing that I have a partial ownership interest in basically every publicly traded company in the world. I'm diversified across the entire globe. I'm not subject to single country risk. I have cash, not a lot, but I have cash, and I have a job, and I have side grifts. I can sleep well. I don't need Bitcoin to sleep well at night. I would not sleep well at night if 15% of my net worth was in Bitcoin. I'd be crapping my pants. Oh, that's so comforting. A highly volatile, fundamentally worthless asset.
I saw so many people after 07, 08 that literally drank themselves to death, jumped off their own buildings, killed themselves. You see it happen all the time. People blow up their portfolios, their real estate goes belly up, and that was their whole life and their whole identity.
Because guys, buying Bitcoin and buying MicroStrategy call options, that's not going to blow up your portfolio. Okay? No. You're going to be perfectly fine. Perfectly fine.
Identity was tied to that one thing, okay? Is it really worth it? No. So I'm not trying to be morbid or weird, but it's true. Some people are so obsessed with money and what money brings them and the allure and the prestige and their ego and all that stuff that they end up killing themselves over what? Some digital pixels on a screen, right? It's not worth it. So with me, I sleep well at night. If Bitcoin goes to zero, great. There goes 22% of my net worth. I don't care. Stocks.
22% of your net worth gone? That's not good.
Go to zero, great, doesn't matter. Real estate zero, great, doesn't matter. I don't care. I'm not that invested in any one of these things where if someone comes and steals this gold, no big deal, okay, whatever. Life's
Oh, really? Where do you live, Marco?
too precious to tie yourself to a monetary amount. And then Barbell. So the reason I want to bring up Barbell is because some people think, oh, you're crazy. This is way too much of your net worth in Bitcoin. Oh, you're crazy. This is way too much of your net worth in cash. This isn't risky enough. This is too risky. This is whatever. It doesn't matter. So for me, I think that the irony is that Bitcoin is going to move from the risky side of the barbell and the volatile side of the barbell to actually one of the safer things in the future.
Bitcoin is going to be safe, people. Owning all the publicly traded companies in the world, that's not safe. I mean, there's risk to that too. But Bitcoin is going to be the safest, bro. Yeah, totally, bro. It makes sense. We got a con man named Michael Saylor buying Bitcoin with leverage. I don't see any problem. I think everything's going to be fine.
That may or may not happen. You may think I'm crazy, but I don't think I am. So the barbell for me is kind of how I live my life. So my wife has a W-2 job. She does well for herself, but she also has time to raise our kids. And she also provides the health insurance and does all that stuff. So she's the stability. I'm an entrepreneur. I run a couple businesses. My income is like this. It's all over the place. However, we're hitting singles, doubles, triples, in the park, home runs, grand slams. And then hers is singles and doubles like this, right? So we have...
Yeah, she's basically carrying the family here. Let's just be honest.
A foundation and a base. So that's why I barbell invest. That's why I have a sleep well at night portfolio. And that's why I diversify. And if my lifestyle or outlook on life is similar to yours, maybe you should give this allocation a try. But again, this is not financial advice. I'm just a random guy on YouTube. Don't listen to me. I haven't been studying money and geopolitics for 19 years. I have no idea what Bitcoin is. I'm just talking out of my rear end. Thank you so much for watching.
I mean, that's true. You have no idea what Bitcoin is, and you're talking out of your rear end. That's true, Marco. This is a garbage portfolio. This is not good. I'm not just saying this for content. This is garbage.
And have a prosperous day. All right. So all joking aside, I don't think these LeBron rookie cards are going to do well. I hope I'm wrong. Just because the NBA is in the crapper right now. If you look at the ratings and viewership, it is absolutely decimated over the last couple of years. That's because the league is boring. All these kids are just shooting threes. There's no mid-range game. I grew up in the best era of basketball. Give me Iverson, Kobe, Tracy McGrady, Vince Carter, Shaq. Give me all of them in their prime, baby. Dude,
I would not drink a beer with this guy. Sports ball, Bitcoin.
New NBA is so boring.
Yeah, I don't like that dude. I'm being perfectly honest. All right, let's do some comments here. What'd you guys think? I'm the clown, right? Before we get into comments, book a free consultation. I'm a certified public accountant. I do taxes for business entities and personal taxes anywhere in the United States. Book a free consultation. You can talk to me for free. I'll give you an upfront quote. I'll do any business return, LLCs, partnerships, C corporations, S corporations, and then I'll do your personal taxes as well. I could probably beat your CPA because I have no expenses. It's me sitting right here doing your taxes, probably shirtless. And give me your money. Thank you. Hello, dividends. A pizza or a pie? Shoot, I have a cake. He has a more ridiculous video he posted 2 months ago titled, Where to Park Your Cash After Rate Cuts. That you should react to for free. You know, I might actually check that out. I'll give you a free sponsored video. This is the Yin Yang investment portfolio. I don't know what this is. That was a bad portfolio. I'm serious. He has these contradictions. Like, fiat's bad, so I buy Bitcoin, and then I have 15% of my portfolio in fiat cash. What is going on here? Million subscribers. Yo, Strongman, don't you think it's a bit primitive to recommend index funds people on YouTube instead of using your brain to draw vertical lines for securities on a chart? I should do the grift. I should do a Patreon where I pick stocks. And if the stocks drop, I'm going to sell the highest share lots. So when they bottom and then they kind of recover a little bit, I can show massive gains. The grift is easy. Like this guy drew a circle and split percentages. That takes a lot of more brain power than say, yes, he is definitely applying a lot of brain power to his portfolio. It's bad, dude. You're just a hater. Who here has contributed? I transferred $2,626. I had that sitting in my, I had extra cash sitting in my savings and Vanguard treasuries. And yeah, I just transferred some into my Roth. And over time, this year, I'm going to max out my Roth as soon as I possibly can. And then from there, I don't know what I'm going to do. He should have made his portfolio 92% Bitcoin. Remember the 2000? Yeah, bro. Why not? He's a grifter, dude. This is not a sponsored video. Oh, check out the gold and Bitcoin, bro. Remember the new Bitcoin talking point? It's now, yes, it is an IQ test, but not in the way that they think. Okay. Greed corrupts people. Vertical lines makes people sick in the head because all they see is the vertical line. They don't know what's causing the vertical line. I can make Poopy Shart Fart Coin, pump it on my channel, and it would vertical line. Does that mean Poopy Shart Fart Coin's a good investment? No. Yeah, what up, bro? If you don't get it, you don't get it. He is. My wife does want me doing a side hustle at work like Instacart because I come home too late. Yeah, I mean, I prefer side hustles like YouTube where I can sit on my rear end in a bathrobe. And they don't pay that. Like, those jobs don't pay enough. Like, tax pays a lot. I'll do tax. I'm not doing Instacart. I'm not a genius. I can't make $1 million on the toilet trading future. She needs to understand Instacart keeps me energized. That's true. Marco's video ain't no sponsorship whatsoever. See, I'm honest. I'm sponsored by myself. Book a free tax consultation. Oh, I'm sponsored to the wazoo. Here's my free member, Dex Invictus. Buy my membership, bro. Trash collection companies are the future. As the world gets richer, the more trash they are growth stocks. I'm investing in the ETF. Trash. Well, that's better than Bitcoin. I can tell you that. Let's see. Bitcoin is a decentralized currency. It's not a currency, dude. It's a gambling token. It's funny how poor people and trust fund kids are the only people giving financial advice. No one is self-made and actually successful. Don't trust YouTubers. That is true. Let's see. Go watch my old videos. Is SGov taxed as income or capital gains? So the distributions are taxed as income. It's interest. And then if you sell it at a gain, I mean, like, it doesn't really fluctuate that much, but if you sold SGov at a gain, that would be taxed as a capital gain. Every 4 years. Oh, it's like, it's 4 years, bro. Just buy the dips in 4 years. Look at the chart, bro. But Jeremy has more money. That's true. He does. How do you feel about the Buffett indicator, Schiller PE indicator being at all-time highs? I mean, that's just one part of the data. But, I mean, the stock market is extremely expensive. But what concerns me more is retail euphoria, retail participation in the stock market, and retail expectations of future returns. When stuff like that happens, when everybody's all in and everybody's seeing stocks going up forever, that's when you're probably in a bubble. I think we're in a bubble in the U.S. stock market, personally. That's not going to change my plan. I'm going to continue to dollar cost average. It's just an observation. But there's nothing you can do about it because, number one, you could be wrong. And number two, if you're right, you can't time it. So I'm not worried about it. Happy New Year's from Greece. What's up, man? 2020. Bitcoin will dump again. I'm 17.9 best individual stocks. Am I a clown? Yes, you are a clown. All right, guys, that's it. What do you think about Marco? Let me know in the comments below. Like, subscribe, check out my tax consultation services. You can do sponsored video. You can buy my book, Stop Being a Broke Loser, on Amazon. All my grifts, but at least I'm sponsoring myself, okay? Have a wonderful New Year's Day. Cheers.